Hello, how's everyone doing today? In this video, we're going to be talking about the Palantir earnings. I'm going to give you my outlook, and I'm going to calculate the intrinsic value calculation of the Palantir stock. We will give you what it's worth, what's a good time to get in, and we'll do a margin of safety of 20%. And this is no hype, just straight up discussion of what's going on. So just if you haven't heard yet, Palantir reported revenue growth of 31% for Q1 of 2022. Their commercial revenue grew 54% year over year. That's commercial revenue across the whole world. However, their US commercial revenue grew 136% year over year. Government revenue grew 16% year over year, and customer count grew 86% year over year. The red is essentially what I think is bad. So the earned and adjusted was 0.02 cents per share off of $446 million in revenue. Analysts were expecting an adjusted 0.4 cents per share. Unfortunately, they let down by 50% of the difference in terms of earnings. Now, the revenue, they went ahead and focused. The company likes to focus on revenue to promise 30% or above. But analysts were expecting from this 443, but we'll go into their outlook, which has unfortunately changed. So for the current quarter, the company said it expects revenue of at least $470 million. Analysts had been looking for 483.7 million. Now, here's the issue. They actually pulled 446. So they pulled less than what they were expecting. So if you were to calculate this, they started off by saying they wanted 470. They ended up getting 446, which is a net difference of 24. So 24 divided by 406, they got a reduction in approximately 5% of their current calculation, right? So the first quarter loss was $101.4 million or 5 cents per share compared to a loss of $123 million or 7 cents per share a year earlier. So they are getting better in terms of that regard. Now for outlook. So Q2 2022, their base case was 470 million in revenue versus the consensus, as I stated, of 483.76 million. So this is what they're expecting. However, they did say upside to guidance in response to geopolitical events such as Ukraine and the Russian war and the invasion of Ukraine. So they're saying that the world is just not understanding the imminent threat of a nuclear disaster is higher. And unfortunately, Palantir thrives in bad times, but also in good times. And he kept on hitting these types of language. Now, personally, I'm an academic by heart, so I understand his word choice. He has a PhD. And it's very difficult sometimes when you talk about the theology and ways of describing the abstract world. It gets to a point where it's a little difficult for the normal investor to keep up and comprehend. So Palantir needs to focus on being able to communicate its software to a level where it does not piss off the government, right? So their annual revenue growth is 30% or greater for 2025. Now, just doing a simple calculation of looking at the annual revenue growth of 30%, we're expecting $2 billion for 2022, $2.6 billion for 2023, and $3.3 billion for 2024, and lastly, $4.4 billion in 2025. So now we're going to calculate the intrinsic value calculation by utilizing our proprietary intrinsic value calculation from the Mastering Stock Market course. Then we will shift gears and look at our proprietary brain machine. And I assume since you guys are like Palantir, you guys like machine learning algorithms, which is what we utilize here and what we've created here at Al Stock Trades. So we'll be giving you the DCF from that regards in comparison to the beta, which I'll explain what that means later. So as you can see, that we're going to, in this calculation, we're going to be using the revenue from 2018 to 2021. We're not so much going to be doing 2022. We're just going to say 30% revenue growth because this company is very adamant at producing. The only thing I'm going to be taking from this is the shares, which is 1,924. and also the free cash flow, which is 321. Now I'm going to be eyeing the free cash flow. I hope it doesn't go down because that will definitely adjust. I do see that, but I hope that they are able to pull things together. So just a very quick, the gross margins of this company went from 72, 67 to 78%. That's extremely well. That means they get to hang on more to their dollar, which explains why their free cash flow, they're able to take more from that, from the operations, from the revenue. If you look up the operating margins, they are getting better, extremely better than how they started. And the only issue with Palantir is the share dilution. Now they possibly might keep diluting, which unfortunately is not good for current shareholders, but they do that as a form of competition, not to dwell into their cash, but as competition to retain the best engineers possible. So Google and Apple and all the big tech companies such as Tesla do not steal their innovation. Of course, you're very welcome, and hello, hello. So in that regards, let's go ahead and calculate the intrinsic value. So just very simple, we're going to put 30%, and that I think they're going to make more year over year, but we're just going to be very conservative here. For the free cash flow, we're going to go in and put 334, and then we're going to go in here and we're going to type in the shares, which is 1924. By doing that, let's see here, you would get a calculation of $8.26 as the bear, all the way up to $16.63. Now, let me take a moment here to take a look at this really quickly here. Okay, so let's just redo that. All right, so let's do 2018, 595, 2025, which we said by 2025, we said it was 4.4 billion. So we'll say 4406, which is around 33%. 321. Doesn't matter what year you put it in, it just takes the average. And then 1924. So 9 to 19 for the 33. Let's drop it down to 30. There it is. That's the more accurate representation now. All right. So as you can see, the bear case is $7.94. The base case is $10.90. And the bull case is $15.99. Now, I feel very sad for the people that bought in higher, but what they were calculating is in the beginning of the year, when Palantir became publicly traded, they were trading at around 45% to 50%. So people were assuming, and a lot of YouTubers out there were assuming that the company was going to grow 40 to 45%. So if we put in 45% here, it changes the equation drastically. You start seeing the calculation go from $20.68 as the bear to $29.18 as the base and $43.95 as the bull. You see, that unfortunately was the analysis of Palantir. Because if you go in and look at the 52-week high, and I think it's been a while, it's been more than 52 weeks. But if you look at the high point of Palantir, it was around $45 before it slumped down, which is right around the bull case, because people were calculating a 45% year over year growth. But unfortunately, Palantir and a lot of people that report on Palantir have been disappointed because they haven't been doing that. But let me just say, they've been clear. They said we're going to get at least 30%, which is pretty good growth, if you ask me. This company is going to take time, but based off of these calculations, it is worth from these ranges. Now, if you want to be in what I think the market is doing, I'm thinking we should take a 20% margin of safety at $7.94 to calculate what is a good entry for the stock. So again, we're going to take 794 and multiply it by 20%. If we do that, we get $1.58. Then we can subtract that. So a good entry is $6.35. That's a great entry for a 20% margin of safety. Now, let's just go ahead and do the calculation again. And we just to confirm here, we're looking at $6.35. So now looking at the uh, technical analysis here, if we zoom in here, we do see we have a lot of volume. A lot of people are selling. Cathie would ended up getting out of the position. Now, the reason why I think Cathie ended up leaving was because of the government contract, the government revenue. It's not growing as rapidly. Now, the original consensus was to focus on commercial, which is what they were doing. However, they should have kept their government going, or if they even can keep their government going, to be able to sustain that 45% revenue growth. They're only doing 31%. So they should at least try to be competitive for the government in order to basically grow 31%. Another thing that's not good is so the US commercial growth is growing 136, but they're essentially not commercial growth outside of the United States. How much is that really growing? I want to know that. And we got to parcelate through that. So that's something we got to take a look at. So from there, my entry is $6.35. But you can't go wrong with these prices. I mean, these prices are great. Now, I mean, this calculator tends to go 10 years into the future and discounts back. So, I mean, if we were to take the, if you really like, if you want to just get more of an accurate, like, what would it be in 2025? We could take the 15. So what we could do is 15.42 multiplied by 20% gives you 308. They have around 321. So we'll do 20%. Okay. So what we can do is we can take the revenue from 2025, which is 4406, multiply it by 20%. You would get 881. So you could just put 881. You can see that the stock price is going to hover anywhere from $14.83 all the way up to $29. Now, this form of free cash flow will be insignificant if they're continually doing 881. So we can just assume that just to kind of get an understanding. So the stock price could go from 21 to 43. But honestly, I would rather keep this particular free cash flow. And I would say anywhere between $14.87 to $29.93. I personally don't see this riding up anytime soon with the revenue crunch. They need to increase their revenue. So based on these prices, I wouldn't expect for the next year or 2 years, I wouldn't expect Palantir to move away from these prices. And it seems that management doesn't really care about the share price, which, as they should focus more on their product. But for investors that are wanting a short-term gain, this wouldn't be a company for you. So there's that. Now for our proprietary leading edge and market analysis, we use machine learning algorithms to help us here. So if we go in and type in DCF PLTR, what you would do is you would see a DCF stock price of $8.67. Now it's sitting here 7.5, but from the recent numbers, we're at 7.5. So we're taking the numbers exactly to that point. Whoop, pardon me. So we're looking at a stock price of $8.67, which essentially was what we calculated originally from that bear case, but I went ahead and changed it up, reflected of 2025. But you can see it's right around that. So I would say with a margin of safety, we're looking at $6.35. Overall, I believe that is all I have for you guys. Let's see here. Any questions? Yeah, definitely you can. I think that definitely the market is tough, but you got to be careful. There's definitely cult stocks, so you got to make sure you're aware of that. But other than that, the RSI is definitely down here. We're talking in the, almost headed down to the 9 territory where 30 means oversold. So this is definitely oversold. The MACD is free falling. I don't see any signs of a reversal. So it's like catching falling knives now. So you got to be very careful. In fact, let me give me a moment here. In fact, let's change it up to take a look at the 1 minute chart. Even though I don't really prefer looking at the 1 minute chart, I tend to enjoy it because it's great for getting in and getting out. So based off of this right now, where we're looking at really quickly is this is the 1 minute. It looks like we are bouncing off of the lower VWAP and the middle VWAP. And we also have the 180 days simple moving average. So we got true strong resistance levels here now, capped at around 760. So we might be bouncing off of this for a while right now. Usually, I think we may get into a period of stagnation and consolidation before we do rise. But I would say give it 48 hours to 72 hours for analysts to come in to engage in price targets. Now, I don't think analysts have stepped in yet. They're still trying to absorb this. But if you were to take a look at it, we can go to Al Help and pull up our help menu and take a look at our price target menu. And we can look at so the consensus is still around $15, which is the bull case. If we look at any updated analysts, so for people that are in my private Discord channel, continue looking at this because they're going to start reposting their updates. This is from April 27th. So just keep into account. You want to take a look at the updates. We do see RBC Capital hitting them up with a $12. I mean, that's almost half there. So there's a $20 here from, I don't even know who these people are. Mona, I know Piper Sandler, Need Him. That's the ones I track. But I'm trying to see what else needs to be done so I can. There's one more thing I wanted to show you guys. I want to make sure I give you guys kind of the whole analysis here. Yeah, I think I'll post it if I remember. I just don't. Yeah, that's pretty much it. Honestly, I think that's it. But while you're still here, in the link down below, probably at the end of this video, if you can't see it, we do offer 5 free stocks from Webull if you deposit a penny. So hopefully that is able to offset some losses for this. But definitely take a look into this. And for people that are interested in Palantir and like Palantir, take a look at Clover. I think Clover is going to kill it. Clover is really good, and it's in the AI frame as well. So take a look at those companies too. Off topic, good entry price. I mean, I think so. I think this is a great entry price. We're next to a 52-week low, and I just don't think this company can go down anymore. You see, I remember now. Thank you for reminding me. So, a lot of people are coming in and they're saying, Palantir, the revenue multiples were extremely high. And a lot of investors, unfortunately, they got into hopium before they were just buying the dip at around $25, $22, $21. And now those buy the dip people ran away. In fact, all the money that was given to retail investors in 2020, that they've pretty much lost that. They've lost that, unfortunately. So they don't have that money anymore. If you look up the retail inflows and outflows, all the gains that the retail investors have made in 2020, they've lost them. So just understand that. I guess just an easy way to look at it is if you go to PLTR, you would see right now the revenue multiple's gone down to 8.8. Now let me just double check that. See, look at the price to sales here. Yeah, so the revenue multiple has gone to 8.8. I like CrowdStrike. I can't wait to see what's going on with them, but I do like them. But overall, that's pretty much what we have right now for Palantir. This is our price target. I remain a hold on the company as it's slowly going to ascend to its intrinsic value. As of right now, this is its intrinsic value. They do need to work on short term, the revenue. growth. But it seems to me that they're going to just cap it at 30%. And I think it's just going to consistently grow at 30, which unfortunately, I know it's not like a hyper growth stock, but it is a growth stock, but it needs to compress down to its evaluation. And that's what's happening right now. So I would do about 20% of this, which is $6.35, which is an amazing buy price. I think shares, if it does go down that low, a lot of growth/value investors will come in and scoop the crap out of the company. All right, guys, that's all I have for you today. Make sure you hit that like button, as it will help the YouTube algorithm. And if you enjoy this content, please consider subscribing, and I'll see you guys on the next one.